you live in the state of Florida, you need to be careful. My mortgage went up from $2,300 a month to $3,500 a month.
So I see these videos quite often. There's a lot of anger, and rightly so, but nobody really understands it. And honestly, if you don't understand it, it's not your fault, because nobody's teaching you this stuff. So the main confusion is, my interest rate's fixed, how does my payment go up? And sure, a lot of people understand that property taxes and insurance can go up, but it doesn't equate to $2,300 to $3,500 like this guy said. What happens in this case is you have an escrow shortage, which is something like this. If you have a mortgage right now or you're getting one, save this video. I'm going to show you what to watch out for. Obviously, the principal and interest is fixed. That should not change for 30 or 15 years, however you have it set up. Unless you have an adjustable rate, but most people don't. The second part is your escrows. That includes things that are paid on your behalf when the loan is set up. A lot of mortgages actually require this, so you don't forget, and the bank doesn't have to come repo your home when you forget to pay your taxes or your insurance. And a lot of times, if you don't select an insurance company, they'll force place one for you, and it's much more expensive. So make sure you shop for insurance every year. So when your escrow account is set up, they take your tax bill, divide it by 12 months, and they add that much to your payment every month. The same with property insurance. The same with mortgage insurance if you have it. Most HOAs are not included in your escrow account. So let's say for easy math, when you buy this house, the property taxes are $2,400 a year and the insurance is $1,200 a year. That's $100 a month and $200 a month. So $300 a month is added to your payment. That way at the end of the year, they have $3,600 to pay $3,600 tab. Now the problem where most people get in trouble is when you buy the house, that home is assessed that next year and the taxes change. When the taxes change and the fact that the taxes are paid at the end of the year for the previous year, not ahead, that means you've got a whole year paying the wrong amount to your escrow account. Sometimes it's taxes, sometimes it's insurance, sometimes it's both. Now that difference ends up right here. And you have two choices. You can pay the lump sum, which is a lot of money right around Christmas time, or they can add it to your payments. But remember, because it's paid in arrears, now the next year you have to pay that too. So whatever this balance is, you pretty much have to double it, which in this case would be about $3,000 because you've got the current year and the past year you have to make up for. So in this case, your payment's going to go up $250 a month, but after the first year and you're paying back the previous year and keeping current on the current year, it will go down to $125 a month difference. Hopefully you guys followed me there. If you didn't, let me know and I'll try to answer your questions. And I know a lot of you are saying, well, that's not $2,300 to $3,500, so what happened? Most of the time, this is a new construction or a house that's been homestead for such a long time that when they estimated those taxes, they were so much lower than what they are now after they're readjusted. So for example, if you buy a new home that's completed, let's say in April, and the lender pulls up the tax bill and it says $600 a year, and they set up your escrow account for $50 a month, which they shouldn't, but it happens, especially those lenders that want to make your payment look low, you get this type of payment shock. Because think about it, if that goes up to $3,600 a year, that means you're going to pay $600 when you're supposed to pay $3,600, and then you're going to have to pay $3,600 on top of that, which is $600 a month difference. And then when you add in the same thing for your insurance, especially in Florida, that can add easily another couple hundred. So you can see how you can get up to the $1,000 range pretty quick. Because the property taxes I'm talking about are pretty much the $350,000 starter home anymore. So anything above that is going to be much, much larger of an impact. I'm going to go ahead and assume he's in the $500,000 to $600,000 range. I'm going to go ahead and assume he's in the $450,000 to $525,000 range for purchase price. And again, the good news is if he went from $2,300 to $3,500, he should be at about $2,800 next year, or if he pays that shortage in full. But you can go onto your mortgage services website and see exactly how much they're collecting. You can see exactly what your current property taxes are when they're assessed in November. And then if you put that money aside, you won't have the same payment shock. I really hope I articulated this one well, because this is something important that I think everyone should learn. And honestly, every realtor should at least know about this and mention it, especially to first-time home buyers. Honestly, this is part of the stuff that sets you up for success for referrals in the future. Because when they say, oh, I didn't have those issues, my realtor educated me on this. I mean, it's pretty obvious who that friend group is now going to recommend as a realtor to talk to if you're interested in buying a house or selling a house. So again, I hope this came through well. I'm sorry I didn't have an actual estimate, but this is the best I could find. If you like this video, hit the button, save it, send it to a friend that might help.